Well, welcome everybody. Just so you know, this meeting is being recorded. So if you need a replay, you can let us know. We will also be posting this on our website. So if you'd like to listen to it again at a later date, it should be there in the near future. I see lots of old friends and many supporters on the list of attendees today. So hello, Heather, Oliver, Anthony, Colin, Shuja. Thank you all so much for your attendance today. We realize that these are still very difficult times for you, challenging times for advisors and their clients for that matter. And we want to let you know that we sincerely appreciate your business and that we as a sales team across the country are here to support you in any way that we can, any way that we can add value. We'd be happy to meet with you one-on-one, virtually, and help you navigate these difficult times. Today, we've got a great opportunity here to talk to one of our team leads at SSQ in the underwriting department. And this is usually a highlight for advisors because there's a lot of questions that I know come up in the field that you don't necessarily have a direct opportunity to ask of somebody with such expertise. So Martin, thank you so much for joining us today. I'll formally introduce Martin in a little bit. I'm going to take this opportunity though to do a bit of a commercial and update you with regards to what's going on at SSQ. I stole the title of this presentation, Pulling Back the Curtain, from The Wizard of Oz, because as I said, we often don't get an opportunity to pull back that curtain and talk to the underwriters and get their direct insight into how they make decisions and what goes into the underwriting process. So this is a great opportunity, and I thank you all for joining us today. So let's get started. As I said, the agenda is going to be that I'm just going to do a quick update of what's going on at SSQ or what has gone on. I'll introduce Martin. He'll talk about some of the new and exciting things that are coming from the underwriting department at SSQ or that have come from the underwriting department at SSQ in recent months. We will pull back the curtain and have a conversation with him, a number of prepared questions that we often get in the field from our advisors. And then, as I said off the top, you will have an opportunity to pose your questions. So don't wait to pose those questions. Feel free to jot them down. Stephen, Paul is helping moderate this session today. He'll be looking through the questions and gathering them for us at the end of the session. And you have to stay to the end. If you want your CE credits, you've got to stay all the way to the end. So I'm sure it won't be a problem though, because we're going to keep you well entertained. Right, Martin? Good stuff.
Sure.
Excellent. So first things first, what's new? My goodness, it's been a crazy few months for us at SSQ. In January, it was announced that we would be merging with La Capitale. That came to fruition in July of this year. So we are now one organization, technically, but for the balance of this year, we're operating as two separate entities and will continue to do so until the new year, at which point we'll have some amalgamation, and you'll hear more about that in the coming months, including what our new brand name is going to be, as it is a merger of two equals. And we have now formed the largest mutual company in Canada. And as you can see, this gives us a lot of credibility, clout, national presence. We've grown so much in the last 7-8 years since we entered the brokerage market in Canada. And this is really just going to help catapult us to become that much more competitive going forward. And on that note, on June the 8th, it was announced that Jean-François Chalefaux was named the chairman of the board of directors for CLHIA, the Canadian Life and Health Insurance Association. This, I think, is an excellent opportunity for us to have a louder voice in the insurance community going forward, and certainly give us more credibility in the insurance community as well. Because, as I said, we've only been in brokerage for the last 7-8 years, really, and this is just going to solidify our footprint as a national organization. So congratulations to our very own Jean-François Chalefaux, who will also be the CEO of the new company going forward. And what else happened? Well, we launched a simplified issue product, and that was done in late June, and it's been seen with tremendous success. We launched this product with 3 key initiatives or highlights in mind. First, we wanted to be the most competitive in terms of pricing, and we certainly have been able to do that because we're the only simplified issue provider to offer banding. Anything over $100,000 of face amount is going to provide your clients with anywhere from 20 to over 50% savings versus the competition. So we're very proud of that. You can look to LifeGuide or WinQuote to compare us to the competition and reach out to your local wholesaler for more support and more information on that. In addition to competitive pricing, compensation is something that we also wanted to be strong with. And in that regard, what we've done is we've used the same compensation model that we use for our traditional products, which offers upwards of 25% more compensation to you, the advisor, for the exact same product that you'd be getting elsewhere. And then finally, we wanted to really revolutionize the industry in terms of turnaround. And we're able to issue a policy in under an hour. In fact, just a couple of weeks ago, I was working on a case with an advisor, and the client had the policy in 13 minutes. While we were still on the phone with the client actually received the policy in their inbox. So that's incredible turnaround. And if you don't know about this product, please make sure that you reach out to your local wholesaler to get more information on it. For your clients that are using marijuana regularly, suffering from diabetes, perhaps they have build issues, extended travel is another area where we're very strong, or maybe they're healthy and they just don't want the hassle of going through all the medical questions or having some stranger come into their home to have to take blood and urine samples. So, if they're young and they're busy and they just want a quick turnaround, or maybe they're an older client just looking for some simple final expense coverage, for an extra 3 to 15% more than traditional pricing, why wouldn't you consider this incredible product? So make sure that you reach out to your wholesaling team to find out more information on that. We're still in the midst of the coronavirus pandemic, and as a result, it was incredible how the industry rallied around each other and around you, the advisor, to help facilitate the processing of business. And a lot of the provisions are still in place for the time being. So I'm just going to go through some of what we've done that's still in place today as far as your underwriting goes. And so first and foremost, for life insurance, up to $1 million to age 50 is still considered non-medical. As you can see on the screen, up to age 60 and 70, we do still have the more lenient limits. We offer underwriting on all of our EAP cases, which are all underwritten through Dynacare. And if you're doing a paper application, we are allowing you to submit that business electronically with electronic signatures by email or fax if you're still using fax. The clients can still choose to have a video paramedical if they wish with the paramedical nurse. If they don't feel comfortable with them coming to the home, they can request that specifically. But the paramed companies are actually going out to see clients these days. All of this information can be found on our website. If you go to ssq.ca, there's a banner across the top that mentions COVID-19. You can click on that and it'll take you to additional information regarding administrative questions you might have or underwriting questions you might have. We are accepting, as I said, electronic signatures, whether it's just through an email or fax, or even through DocuSign, Adobe Sign, or OneSpan. They're all accepted as well. We cannot accept electronic signatures, though, for policy owner or beneficiary changes. And one other thing I wanted to mention was, I'm going to skip over this here, investments. We're also allowing you to submit any of your investment paperwork electronically as well. So as you can see, we're really doing our best to make it easy for you to submit business during what is still a challenging time, even though some of the restrictions are being lifted. Okay, so let's get into Martin. So Martin Remillard is going to be joining us today, and I'll just do a quick introduction to Martin. Grab my notes here. Martin has a master's degree from the University of Montreal. He's got 17 years of experience in underwriting, specifically with both Manulife and SSQ. It seems like everybody on the underwriting team at some point or another has worked with me at some company. And I don't know what that says. Maybe I've worked at too many companies. Um, Martin is the team lead for the underwriting department, which is what he's been doing now for the last 7 years. He helps train and develop underwriters while also being responsible for our VIP cases. And for those of you who aren't aware, a VIP case with us is anything with a face amount in life insurance of $5 million or more, $500,000 or more for critical illness insurance, or anything with a premium exceeding $15,000. For those cases, you get the white glove treatment, and you get to deal with Martin directly to help navigate the case administration. Martin lives just outside of Montreal with his wife and his two teenage daughters, which is probably why I have a full head of hair. I only have one. You've got two.
Hey.
And as a true Canadian, the family loves to ski, alpine skiing specifically. And my favorite part I learned from talking to Martin is that he's a Giants fan, a fellow New York football Giants fan. Unfortunately, we did not have a good night last night, Martin.
Oh, no, we didn't.
So
let's skip ahead.
Let's skip past that. Yeah. So Martin, can you please share with us what's new or coming soon at SSQ?
Oh, sure. First of all, I'd like to say thank you for having me. And it's always a great pleasure to come and speak with all of you advisors. We don't often get the chance to speak about underwriting, so it's really a pleasure for me to be here today. So what's new at SSQ? Well, I'd like to talk to you about two specific things. The first one is an authorization to disclose personal and medical information form. That's been offered actually to advisors since late last year, late 2019. It's actually a form that needs to be completed and signed by the client, and it allows the underwriter to discuss the contents of the file with the advisor. So we'll be able to explain our decision about any information in the file, even the doctor's report. So it's actually not a form that's completed upfront. It's a form that's used at the end of the process. So if the client has a difficulty understanding a decision, he doesn't quite understand why he was rated or declined, that's actually a tool that can be helpful for us to be able to explain the content of the file and better explain it to the advisor, which in turn can explain the decision to the client. So the authorization would not be required for most file. However, if there's really a lack of comprehension on the client side after they've discussed the decision with the advisor, then that might be a good place to go and accelerate the process if there's really incomprehension of the decision. The second part I'd like to discuss is the immigration guidelines. That's actually really exciting news for us. So over the last few years, both the federal and provincial governments have made changes to the immigration process, and they've changed the way people can get permanent residency. So in order to be in line with that new process, we did some modifications to our guidelines. So one of the exciting things is we will no longer require the client to have applied for permanent residency. And another big change is that the applicants no longer have to wait a specific amount of time. So previously, depending on the client's situation, you had to wait either 6 months or a year. And now we're able to offer on most new arrivants right away. So a copy of the work permit will always be required, and we will be able to allow different amounts depending on the type of work permit that the client has. So whether it be employee-specific work permit, a post-graduation work permit, if the client is a part of the provincial nominee program or student permit, even if he has a protected status through the refugee, we will be able to make an offer. So it's really good news because in the end, it allows us to make more insurance to more clients.
Yeah, thanks for that, Martin. Yeah, with regards to the immigration guidelines, I believe it's if they're here on a provincial skilled worker permit, we can allow up to $2 million of coverage, correct?
Yes, so that's why I said it depending on the situation of the client. So some of them like nannies, we would go up to 250,000. And if they were selected in the provincial nominee program, which basically guarantees them permanent residency, we can go up to 2 million for a higher face amount. Yes.
That's excellent. And also, just to clarify, that the advisor doesn't have to wait for the doctor to receive the information before having an authorization form signed to allow them to talk to you. We can talk to them in advance of the doctor getting any report regarding a decline, correct?
Oh, yes. So actually, if it's the end of the process, and you don't think that the doctor can add any, sometimes it's not even medical. So not all the files have to go through to the doctor before you use the authorization to disclose form. So sometimes it can be actually a non-medical issue. So not all files have to go through the client's personal physician.
Okay, great. Thank you. So, now behind the curtain with Martin. So we've got an opportunity now to talk to the wizard himself. So as I said, we've got a number of questions that we've already put slides together for that have come from you in the field over the last number of months. And so as again, I said in the beginning, I'll remind you, please, if you've got any additional questions you'd like to add, please do so in the Q&A box on your screen. So let's get things started with COVID-19. It seems appropriate that we start off with that one again. But before I do, I want to once again just say to all of you that we really appreciate the challenges that you've been faced with. And I think it's something that we should all be proud of, how the industry has rallied around and how we're continuing to evolve. And I think the industry is fundamentally going to change going forward as a result of us having to adapt in the way that we have since the middle of March when this hit. So again, kudos to you, kudos to Martin and fellow underwriters, and kudos to all of the insurance companies for putting together some great programs to help us continue to do business in this challenging time. So Martin, is underwriting the same process, or is it more relaxed for smaller amounts during COVID-19?
Yeah, okay. So we've actually mentioned that we have relaxed age and amount requirements due to COVID-19. So actually fewer requirements means fewer delays for the files which we are able to do easings on. And our turnaround time is still 24 hours. It was before COVID and it still is. So by turnaround time, I mean how long it takes an underwriter to see a piece of mail or an application, a doctor's report, from the moment it's been received in his workload to when he's going to actually review it. So we work everything on a 24-hour turnaround basis. So it means if an APS is received today in the underwriter's file, it's going to be reviewed tomorrow by the underwriter. So basically combining the two elements, it means that for cases, let's say before age 50 and under $1 million, we have lower requirements, we have less requirements. And for cases that are actually pretty clean and a lot of no answers, it actually means that you can get an answer inside of 24 hours on some cases.
That's great. And how likely are we to keep these new non-medical limits going forward?
Well, we're actually working on it, and we were working on it before the pandemic. We were looking to extend our non-medical limits to higher face amounts, and the situation has actually just increased the importance of going this way. So right now we haven't announced anything yet. We still have the requirements, the grid the way it is now, and we're working with our actuaries to keep it the way it is. We're working on it, and stay tuned for an upcoming announcement.
Okay, thanks, Martin. So you hear that, everybody? Stay tuned for an upcoming announcement. Marijuana. So this is absolutely a hot topic, and that is marijuana usage. Is there any difference between those that use marijuana because it's been prescribed by a doctor versus those who use it recreationally?
Yeah, okay, so we do look at them differently. The analysis and the underwriting when it comes to medical marijuana is actually heavily influenced by the underlying disease. So in general, medical cannabis is used to treat the symptoms of an underlying condition. So these symptoms may come from severe pain, muscle pain, severe arthritis, cancer, HIV-related weakness, even glaucoma or seizures from epilepsy. There's actually many more. So when we underwriting medical marijuana, what we want to get at is what was the underlying condition, and that's the way we're going to look at the file. So that's the key issue here, where when we're looking at recreational marijuana, we're actually more looking on the basis of frequency. So how many times per week or per month does the client use marijuana? We will also look at the client's overall lifestyle, if he has a history of abuse of other substances or a history of nervous disorder. So we'll take all of that into consideration, and we'll look at the risk of complications related to the use of recreational marijuana use. So they're not quite looked at in the same way.
Okay, thanks, Martin. You know, since it's been legalized, I don't know if more people are actually using marijuana or if it's just being discussed more openly because it's a legal drug now. But many believe it's no worse than drinking alcohol in terms of impairment. So my question to you is this: why is marijuana usage considered differently than alcohol usage?
That's a good question. The first answer would be that there's actually much less experience on marijuana because it's been legalized very recently compared to alcohol. So we have a lot less experience globally. If we look at marijuana, there's also a lot of different products out there. So some of them have a combination of CBD, which is the relaxing substance, versus the proportion of THC, which is the psychotropic substance. And the amounts of each of these products in a lot of variety of cannabis products, they vary significantly. So not all cannabis products are the same. So we're learning, we're developing our knowledge of marijuana, and we can expect better understanding and maybe better decision with short and long-term effects are better known, and we have better studies. What I can actually say, though, is that in the last few years, there's actually been a lot of changes to the underwriting of marijuana, and we've even relaxed some of our guidelines for recreational marijuana use in terms of frequency just over the summer. So weekly intake of marijuana should be a non-issue in most cases. If the rest of the file is clean, then we would be good to go.
Excellent. And see, this is why I always say the best product is at SSQ is actually our underwriting. That fairness, that leniency, that's what I'm very proud of as a wholesaler at SSQ. So as you're saying, it really does come down to lack of scientific testing and results in these decisions. And you touched on CBD there momentarily. So as of today, we can't treat CBD usage any different than THC usage, correct?
Well, yeah, so we're starting to looking at it. We're considering them. So we're looking at CBD and we're taking it into consideration. So most manual will have information in regards to marijuana, but as I've mentioned, we're getting more and more knowledgeable in terms of CBD and THC. We can take it into consideration, but right now we're usually underwriting marijuana as a whole.
Okay, perfect. Thanks, Martin. MIB, and here, no, we're not talking about Men in Black. We're talking about the Medical Information Bureau. I often find advisors really aren't that familiar with MIB and how it works. So if you don't mind, can you explain, when we do an MIB investigation, what information are we looking for and where does that information come from?
Yeah, no problem. That's usually like one of the topics that I like to speak a lot about with advisors because I find that there are a lot of misconceptions. So first of all, we do MIB code reviews on every case. What we do is we compare the MIB codes with the information provided by the client. And so MIB codes actually contain information provided by the MIB by other carriers when the clients applied previously for previous insurance applications. So basically everyone who applies for insurance the first time around has a blank MIB record. So an MIB code would actually contain a code for a disease or a test. So basically what the issue is. We will also have a code that's related to it, and it would actually tell us what would the source of the information. So where did the information come from? Did we get the information from a declaration from the client? Did we get it through a doctor's report, or did we get it from an abnormal lab? So that code, we know where the information came from. And then the final part of the MIB code is a time-related code, which basically tells us when the client had this episode or this diagnostic. So let's say you applied elsewhere at Canada Life and you mentioned that you were diabetic. Then if I would look at an application today, the only information I would see was that you had mentioned on an application that you were diabetic, that you were being treated for it, and that you were diagnosed 7 or 10 years ago. The MIB does not contain any of the other company's decision, and the MIB does not prevent a client from getting insurance. So we do not use the MIB codes to base our decisions on. It only allows us to know if the client is telling us the entire story. So if the client had mentioned that he had a heart attack with another carrier, we would be expecting him to have the same declarations with our current application. So the only problems come when there's a divergence, and an investigation would be done if what's on the MIB code does not match with what the client is telling us on the application.
Okay, and you mentioned some of this information comes from doctors' reports. I just wanted to clarify that doctors don't send reports to MIB. It's only when it's obtained in the process of obtaining an insurance application, when they're applying for insurance, that doctor's report would end up providing this information.
Yeah, so the way it works is that if I get an information, I'm an insurer, I'm looking at a file, and the client mentions that he has a heart attack. So I get the APS, and I've looked through the file, and I decide to accept the file with a rating. At the end of the process, I would actually code the information that I verified in an APS that the client did have a heart attack, and I would put that code on. So let's say 2 years from now, he applies elsewhere, then the company would be able to see that another carrier had obtained a doctor's report on that client. However, they would not get automatic access to that information. It would only tell them that another carrier at another time had looked at the client's APS and that they had knowledge of a heart attack that was mentioned in it.
Right. Because, sometimes advisors tell me that they believe that the doctors can actually send information directly to MIB, but that's not the case. It's only obtained in the process of an application.
Exactly, only through insurance companies.
And earlier on, I mentioned that our simplified issue product can issue a policy or deliver a policy to a client within an hour. I'll clarify that if there is an MIB hit, then that would be an instance when it wouldn't be issued to the client or delivered to a client within an hour, because obviously we need to verify that information that's potentially conflicting with the MIB. So just for the audience's awareness there. Next question. So now if we have a discrepancy or if there's some confusion about the information obtained in an interview and what's reported on MIB, what can the advisor do to fix it?
Okay, so basically if, like in the examples we had mentioned previously, if we have some discrepancy between what the client mentioned and what the MIB code would be, we will always get back to the advisor first before doing an MIB code investigation. So we will get back to the advisor and we will ask him, we will give the client another chance to answer the specific question again. So you've all seen these memos. They usually go, we have reason to believe that the client should have answered yes to question 2A or 2B or whatever in the application. And so basically that's a red flag for you. That's telling you the insurance company has more information, usually through MIB, and we're giving the client another chance to rectify the situation and maybe provide more information. So when you have these memos that say we have reason to believe, it's actually a good moment for you to talk to the client and maybe mention to them that we do require complete declarations, and that if they do not provide the complete information, it's actually going to slow the process down because we're going to have to do an MIB code investigation. So if the client would come back and answer the second time around and the answer would still be no, we would have to write directly to the MIB, and then the MIB would turn around and go to the previous carrier who had coded the information, and then that carrier would send us the information. So we never know which company maybe sometimes coded the information, but we go through the MIB, and then the MIB asks them to send us the information. And then that process can drag on for maybe a few days to a few weeks, because basically we're at the mercy and the goodwill of the other insurance company and how fast and they're able to turn around and send us the information. So when you have memos that say we have reason to believe, if you're able to talk to your client and get the most information from him, that's usually like the best situation, because if the information does match, then there's a good chance we won't have to go with an MIB investigation.
Okay. Thanks, Martin. Reinsurance. I'm not sure how much our advisors know about the different ways that insurance companies deal with reinsurance companies. So can you explain the difference between retention limits and automatic limits?
Oh, sure. Okay, so the retention limit is basically the amount at risk on each contract that is kept by the insurance company. So let's say we have $6 million file and my retention limit is 2 million, then I would keep that 2 million and the exceeding amount would be ceded to the reinsurer. So that's our retention limit. It's how much money we keep on each contract. The other term is automatic treaty limit. So that's the group of conditions that helps us determine if a policy can be shared automatically with the reinsurance company. So these guidelines and these conditions are usually defined by the amount of the insurance policy, either the amount of total insurance in force on the client, or it can be a maximum rating. So we can take clients with a rating of 500% and bind automatically the reinsurer to that decision. It can also be because of the age of the client. So if in the older ages, sometimes we do have to send them to reinsurance because they fall outside of the automatic treaty limits.
And are you able to share what our limits are?
Yes. So our automatic treaty limit is $5 million for most cases, and then sometimes 6, depending on which reinsurers we're working with. So given that the average face amount of our cases is around 500,000, that gives us plenty of space to take our own decisions without going to reinsurance.
I think 99% of applications in Canada fall within our treaty limits, so that's good to hear.
They do.
Can you share under what circumstances we go to reinsurance?
Oh, sure. Okay, so we go to reinsurance for mainly 2 reasons. Well, the first one is when we're obligated to, because of the automatic treaty limits. So if any of the conditions I mentioned just a couple of minutes ago apply, then there's a chance we might not be able to take the decision on our own and bind the reinsurer automatically. So if it falls in that category, we'll be obligated to send it to the reinsurer. The second reason we would go to reinsurance is when we decide on our own to go to the facultative market because we think we can actually improve the offers, whether it be ratings or declines. We take the file to market and we'll usually send it to 3 reinsurers, and then we'll be able to take the best offer possible.
Okay. This next one actually came up somewhat recently. If a client is rated with another company where the case went to reinsurance, is there any chance that SSQ can make a better offer?
Well, yes, there is a chance we can make a better offer. So I would actually separate this answer into 2 groups. So the first one would be if you're applying right away with us and you've just gotten a rating from another carrier, I would say you can send it because 1, not all companies use the same reinsurers, and not all carriers have the same agreements with reinsurers on how to deal with their ratings. And then it's not because the company went to reinsurance that we are obligated to do so. So there is a chance we could actually improve the offer. Some files are more gray than they are black and white, and underwriter might see a case through a different angle, or we might ask an opinion to one of our medical directors who sees the case differently than the other carrier did, and we might have a different opinion on it. The second part would be if your rating was a little while ago, then things might have changed. So let's say your client had a rating because of a cancer or a driving record, then sometimes we will be able to improve the offer because of the actual time elapsed. Let's say you have a rating for a cancer and it's applicable for 3 or 4 years. Then if you go back to another carrier 3 or 4 years later, you might get a standard offer. Another situation would be where the client was actually diagnosed and there was a rating because there was something abnormal, whether it be elevated blood pressure or cholesterol, and he goes back and gets treated for it. Then, sometimes just 6 months can actually help us turn around and make a better offer than what the client did. So I would actually encourage you to send the files where you get mild and moderate ratings. I think most of the time you can have a pleasant surprise.
Excellent. I hope everybody took note of that. Genetic testing. This has really evolved from a scientific issue to one of politics, ethics, and now underwriting. So my question to you is this: with genetic testing readily available today, how are insurance companies dealing with this information?
Okay, so actually genetics is a very hot topic and it moves very fast. So as of July, the Supreme Court has decided to uphold the Genetic Discrimination Act. So basically the law that was presented a couple of years ago and that have been challenged in court ever since is now in force. So what does that mean? It means that SSQ will not initiate or require a proposed insurer to undergo any genetic testing of any sort. We will also ask the attending physicians when they send us reports, we will have the statement that says do not include any genetic test information, and we will not consider any genetic testing even if the client would want to provide them as of this moment. So right now, SSQ is not using and is not taking into consideration any genetic information that comes through testing.
All right, well, that's pretty clear. Next is whether or not to ask. That is the question. Many advisors prefer to avoid asking clients the medical questions. And sometimes it's because of the personal nature. Maybe it's because they have a relationship with this individual. Sometimes it's fear of misrepresentation and potential liability. So what is your opinion about advisors asking questions as opposed to a paramedical nurse or tele-interviewer?
Okay, so what I can tell you is that the tele-interview and the electronic paramedical are actually do have automatic supplementary questions that are embedded in the questionnaire. So if the client mentions that he has a medical condition, there will be a subset of questions that will pop up and they will actually provide us really significant information. So these two forms are built especially to help underwriters and interviewer get the most out of the information and will actually prevent us from, will help us take a decision right away, and it will reduce the risk or the need for underwriters to go back and ask additional questionnaires. So that would be the tele-interview and the electronic paramedical. So on a regular para, that's filled, the old route of the old paramedical that's filled on paper. The quality of the information relies on the medical experience of the nurse. So the nurse will ask the questions, and then she will ask subsequent question. And so the overall quality of the para depends on the nurse's ability to ask good follow-up questions, and most of them do it.
Yeah.
So when we get to the paper application, in order to have the most complete information possible and to be able to provide the most complete information to the underwriter, So every time the client mentions a specific condition, then the advisor would have to note most of the following information. So what was the exact diagnosis? When was it diagnosed? Is there a treatment for that condition? And is the treatment effective? If you can also provide us with the name of the doctors, there's actually a question on the application for that, but also the name of any specialists that are being seen for that condition and what tests were done. So that's usually useful information. There's also, you can talk about symptoms. Has the treatment worked? Is it effective? And will there be any follow-ups that are going to be required? So this information would help underwriters assess the risk quicker, and it limits the delays related to additional questions that we might have. It might be even sufficient to help us skip APSs entirely if the information is clear enough.
Yeah, clear and detailed enough, which actually
Yes.
kind of leads me to my next question for you, and that is regarding covering letters. Personally, I've always been a proponent of a covering letter because, you know, my rationale has been that the underwriter doesn't know the client as well as the advisor, obviously. And so, you know, the underwriter, are solely relying on the information that's provided in that documentation. And you have to make a snap decision based on that information as to whether or not this is a good risk for us or not. But sometimes it doesn't paint a good enough or clear enough picture. So I'll ask you, the expert, if an advisor has completed all the information in the application, what is the benefit of also including a covering letter?
Okay, so I'll just start by saying that a cover letter is not required for all applications. However, a good cover letter is really useful and it helps speed up the underwriting process for the most complex cases. So I'll give you a couple of examples. Let's say you have a really complex ownership situation where you have a nephew applying and the uncle's the policy owner because he wants to sell the business to the nephew because his brother is too sick, and then, you know, the situations can get complicated. Sometimes not all of that information is readily available, and we cannot know all of this information just through the application. So sometimes a good cover letter explaining the situation for cases like that, or maybe it's a complex financial situation where you have multiple companies taking out loans and where the holding company is going to borrow money from the operating. So let's say the situation gets complex or there's a complex organogram, then a clear cover letter always is a good tool to help the underwriter do his job. I always say that the advisors, they know the file best. They're the ones, especially on big cases, they've worked for them for many years, sometimes before closing the sale. So they know a lot about everything that surrounds the case. So a good cover letter can help us understand the case right away, and it's going to help us sometimes make our decision without going back for additional details.
So early, when we were talking about reinsurance, you know, we've got our limits, and every company offers credits and debits for different types of ailments and conditions. And so I'm wondering if factors like compliance to treatments or types of treatments and the control of their health issues, if these all lead to credits, sometimes it's not as, the application doesn't draw this information out from the advisor, but it could be valuable information to provide. Is this also information that could be included in the covering letter?
Oh, sure. If he wants to give it in the cover letter, or maybe if he just wants to write it down in the application. So let's say that your client has sleep apnea. And so if you just mention that he has sleep apnea in the application and you don't put more information, we're usually going to have to write back and ask subsequent questions. But if you do write in the application or the cover letter that the client has sleep apnea, that he was diagnosed 3 or 4 years ago, that he uses a CPAP every night, and that his symptoms have gone down and that it's actually treated and dealt correctly. The client has no more symptoms. So sometimes just a little bit of information would actually help us out and take the file right away instead of going back for more information.
Yeah, usually what I say to advisors is you've spent so much time trying to sell the client on the value of insurance becoming part of their, financial security. Why not take a little bit of time to sell the underwriter on why this is a good risk, why they should consider this application, and include all of that great information. So thank you for that, Martin. Next question, disputing a decision. Obviously our goal is to make an offer on every case that we receive. Otherwise, if we don't approve policies, we don't make any money either, right? So obviously we want to approve these policies, but unfortunately, sometimes we're not able to do so, or at least we can't do so on a standard basis. So if a client is rated or postponed or declined for a reason that the client is adamant is not justified, what steps should the advisor follow in order for a case to be reevaluated?
Okay, so the first step actually to do if the advisor wants to communicate something about a decision, it could either go through the sales director or maybe send new information to new business and provide it with the reasons or maybe documents that can help him support the client's opinion. And so that information would then be sent on to the team leader. We're actually a team of 3 team leaders in the underwriting department, and we would actually review the file and we would evaluate the additional information that's been provided. And if a reconsideration is possible, then we would actually forward that file on to the underwriter and we would look at it, and then we would be able to communicate through the field or through the case coordinators that there's been a change in decision. So that's if we're able to reconsider the information. And if we're not, then usually we would actually ask the best way is to be sure that the client and the advisor know specifically why we took the decisions that we did. So we try to give as much as possible a clear and transparent answer where we will tell you as much as we are able to under the laws of privacy. So of course, like I mentioned, if we go through the process and the client is not able to identify the exact reason why we're taking a decision, either a rating or decline, then there's always the possibility of going to the authorization to disclose personal and medical information.
Okay, thanks, Martin. So I just want to let the audience know that this is the final prepared question that we have from Martin before the Q&A period. So make sure if you've got any additional questions you'd like to ask, input them into the Q&A box, and Stephen and I will do our best to get through as many as possible. We should have about 10 minutes left at the end of the presentation to go through those questions. So please feel free to fire them off to us. So Martin, the last question here that we have prepared for you is, how does family history considerations differ between an application for life insurance and one for critical illness insurance?
Yeah, well, they differ because basically there's a critical illness product and life insurance products are completely different, right? So in life insurance, we would try to measure life expectancy. So we would look at family history to see if the client has a chance to develop a significant disease which could lead to increased mortality. So if the client has a history of diabetes or the client has a family history of a really, really strong history of diabetes, we would take it into consideration because we would say that client is more at risk of developing diabetes down the line, and then it's looked through a long-term process. Whereas in critical illness, we try to measure the likelihood of a client being diagnosed with a specific disease that's covered on our product. So we pay upon diagnosis. We don't need to wait until the client has significant complications or there is mortality. So usually the payout would come quicker in critical illness. So we're actually better at treating the complications of critical illnesses rather than we are at preventing them. So it means basically that we have more diagnostic for critical illness that we would have mortality for the life insurance. So when we look at family history or any impairment, they have a different mindset when we look at critical illness.
Excellent. Thank you. So I'm actually going to take this opportunity for a little commercial endorsement regarding critical illness insurance, because we offer a CI rider that is different than our standalone CI product. And the unique benefit of the CI rider is that it is underwritten same as life insurance. So if your client is approved standard or better for life insurance, they're automatically approved regardless and despite what Martin was just saying about the difference in underwriting two products. They're automatically approved for the CI rider. And the CI rider, it offers $20,000 of coverage, 3 covered conditions being cancer, heart attack, and stroke, which I think right now represent about 91 or 92% of claims in Canada. And the premiums are level all the way to age 85. So as long as they keep the underlying term insurance or life insurance rather in place, they can keep that CI product at an incredible price all the way to age 85. And, you know, the two most common objections that I get from advisors as to why they're not selling more critical illness insurance is, and I'm sure you're all thinking it right now, first of all, the price. And second of all, it's too hard to underwrite it. All my clients get rated or declined or postponed or there's exclusions, etc. Well, this CI rider that we offer at SSQ eliminates both of those objections. First of all, if they qualified for life insurance, they're automatically going to qualify for the CI. And second of all, like I said, getting $20,000 of coverage is not going to be expensive. And it may not seem like a lot of coverage, but to somebody who's going through really what can be a life-changing event is being diagnosed with a critical illness, the financial and emotional strain caused by that can be tremendous. And even $20,000 would make a big difference to them. So $20,000 isn't a lot of coverage in that it's not going to cost as much as more coverage would. And as I said earlier, the premium rather, is level all the way to age 85, making it extremely affordable and even more affordable as the client ages. So bear that in mind. Now you have no objections to selling more critical illness insurance. So we're now going to get into the Q&A section. I've read a couple of the questions so far. First, there's a couple that I can answer quickly. Shuja asked, what is our limit for the temporary insurance, the conditional insurance? And that's $500,000, Shuja. What else have we got here? Another question we had was relating to depression and a variety of other mental illnesses. How do we underwrite? How do we decide what risk we're willing to take when it comes to somebody who's suffering from whether it's depression or anxiety or bipolar situations? Under what circumstances could these individuals be considered standard?
Yeah, okay. So when we're looking at nervous disorder, what we're going to look at are the severity of the symptoms. Is it significant? Is it significant enough that there will be a work stoppage, and how long that work stoppage would be? What sort of medication that the client is using? Are the symptoms controlled? And how long has this been going on? So for a case where we would have mild symptoms, no impact on daily activities or work, and it's been going on for a few years, and we're able to see a pattern of stability, then we could actually consider that file standard. What we're on the lookout for and where we might pay a little bit more attention is the severity of the symptoms. Was there any hospitalization? Was there any suicide attempts? Did the client have maybe black thoughts or suicidal ideations? Was there a significant work stoppage? And has there been any change in the symptoms or in the medication really recently? So that would be cases where we would pay more attention towards, maybe get an APS or an additional questionnaire, and some of these situations might lead to rating.
Okay, thanks, Martin. Here's a COVID question. So for critical illness insurance, If somebody's critical illness is caused or initiated by the COVID-19 virus, is the client still covered and paid?
Well, if the policy is in force right now and he would have a disease that makes him able to claim under the we don't have COVID exclusions in our CI products. So if he gets diagnosed with one of the critical illnesses on the contract, yes, I would think he would be able to claim.
I would agree. I would think the same. If somebody, I mean, whether it's methadone, if somebody is on methadone, they're obviously dealing with their previous addictions. How long would we have to wait before we could consider somebody who has used methadone?
Okay, so when somebody is using methadone and they're being treated for previous substance abuse, we usually wait until the treatment has ended. So you go through your rehab and you use medication. That's actually part of the process. So usually it's going to be a good 5 to 7 years before we're able to make offers, because usually methadone will come in more serious substance abuse addictions, and the decision sort of reflects that, right?
Yeah. How is gestational diabetes handled when underwriting?
Okay, so gestational diabetes, it depends if it's just a history of or if it's current. So if it's
let's go with history. Let's assume history.
Well, actually now, like everything in underwriting, everything evolves. But so let's say the client has a history of gestational diabetes, and they were treated with insulin during their pregnancy. If they go through the delivery, everything clears up, they get their checkup, everything is back to normal, we get a normal blood profile, then there's no reason why we can take that client possibly even at standard risk, at standard rates. However, if the client is more likely to develop diabetes down the line, so we would be on the lookout for maybe elevated blood sugar. But if the client comes back to normal and everything clears up and she's through the gestational diabetes, then she would be eligible for standard rates.
Okay, great. Another COVID question here. What lasting effects will COVID have with regards to underwriting? Will it become a question on the medical questionnaire? And if no effective vaccine is developed, would it affect the approval of future applications?
Okay, so actually, the way we're looking at it now, we do have questions in our paramedical, and that's usually just to speed the process along. We are able to cover people who did have a diagnosis for COVID-19. So if we have people who applied and they've already had COVID-19, if they've had mild symptoms, there's no history of hospitalization, they have no residuals, they really had mild symptoms, then if they've been recovered for a month, we could actually consider these applicants. And if the symptoms were more severe, so let's say the client was hospitalized, had to visit an ICU, has more severe symptoms or residuals, then we would wait until a recovery of at least 3 months. And in most of these cases, probably an APS would be required.
Okay. There was a question, Margaret asked how long to get an application, or how long is the average to get an application approved to being issued? Well, I guess what you're asking is after it's approved by the underwriter, how long before it's issued? The answer to that is 2.25 days, according to the last number I saw.
Perfect. A good answer.
There you go. I'm not going to ask any of the claims related questions because I know that's not your area of expertise. So for those of you that have asked some claims type questions, forward those on to your local wholesaler and they can look into that for you. And I guess, you know what, we're at the end of our time. It's 2:00. So you know what, if there's any questions that the audience didn't get answered or would like to have answered, that's what your wholesaler is there for. We've got wholesalers all across the country. What I'll do very briefly is before I end the presentation, I'll put a list of all of our wholesaling team up on the screen so that you can take note of their phone number and their email address. Before I wrap up, what I'm going to just quickly remind you of is that we have some upcoming webinar series. But before I do, I want to take this opportunity to thank you, Martin, so much for your time today. Not just today, but in preparation for today's meeting. We really appreciate you taking the time out of your day and, not underwriting a few policies while you've been talking to us. So, hopefully you can put an extra hour or two in today so that you can make up for that lost time and get those policies issued as quickly as possible, right?
Sure, no problem.
Thanks, Martin.
No problem. It's been my pleasure.
Well, we really appreciate it. Looking forward. So as I said, we've got some upcoming webinars. I myself am hosting one next week, the Insurance Planning for Business Owners session. We're going to be talking about prospecting ideas, considerations for business owners, and some specific sales ideas. September 29th, we've got Hillsdale Investment Management talking about small cap US equities. And we've got a number of sessions that are going to be done and hosted by your wholesaling team all across the country on corporate tax strategies with Jos Herman, who is a wonderful speaker, very engaging, and those announcements I think should be going out today. As a reminder to you, the audience, we are really building out a presence in the seniors market and looking to help you navigate how this ever-evolving market is changing in terms of regulatory requirements. So we're creating a resource center that will help you with information, resources like a trusted advisor form that you can have your clients sign to give you authorization to back check and make sure everything is okay with your client before you're releasing funds or making major transactions for your client. And this all was really kicked off back in May when I interviewed Ellen Bessner with Investment Executive. And if you'd like to hear that, if you missed it and you'd like to hear it, you can go to investmentexecutive.com. Under the CE Center resource, you can click on that, and in the search box, type in Redford or Besner, and you'll be able to hear the whole presentation again and also get a CE credit for it as well. And as promised, here is your wholesaling team all across the country who are eager to earn your business, show you value, and show you why SSQ really stands alone in terms of offering flexibility, benefits, fair underwriting, and ease of business across all lines of products, across all lines of business that we offer. So I want to thank you all again for your time. Martin, thank you again. And please reach out to your wholesaling team if there's anything we can do to support your business going forward. Thank you, everybody. Have a great day.